So let's get on with sharing the screen and getting on with it. There's a heck of a lot I want to cover, not least because there's just a lot happening in the market. So I just want to cover all of that on there. Just give me a second. There we go. Screen 2. And by the way, I've got a slight sore throat, so excuse me if I keep coughing a bit. So profiting in volatile markets for a great 2023. This is part of my campaign for $1 million, by the way, campaignfor1million.com, which is to teach 1 million people how to be better investors. It sort of unofficially started, I guess, about 20 years ago, though I didn't realize it, when I was writing these books. This is published by the Financial Times, The Mind of a Trader, and that'll come up again. Lessons in Trading Strategy from the World's Leading Traders. I'm going to take the best insights from that. And 18 odd books, actually. This international bestseller, also published by the Financial Times, Trading Online. I think I was the first person anywhere in the world to write a major book on trading online from a reputable publisher. So that's what this is all about. It's just continuing that education to everybody and making sure people don't fall into the 70% who lose money and the 30% they stay in who do make money. Hi, Mike from Leicester. Good. We've got Samir as well, beginner. Stocks, I'm going to talk a bit about stocks. Remember, this is a trading one, not an investing webinar. I have two types of webinars, trading and investing. This one's trading, not investing, but I will cover stocks and some of my longer term picks on here as well. Important piece of information. This is not individual financial advice to you because I don't know who you are, and I'm not talking to you individually because we've got a heck of a lot of people on this call. We've got 1,941 registered. You should get about a 50% turn-up rate. So you can imagine it's not individual advice to each of you, okay? So thank you, Carl, Mike already says, Sham as well, Samir Sullivan, Andrew, Dylan, and everyone else. Now, as far as I know, I'm the only hedge fund manager who's just still talking to retail clients. And that's because I started off as a retail investor. I was just trained originally as a barrister and then started trading on my own account. And only then, having won some competition in the Financial Times, managed to raise some capital, did I set up it was a Cayman equity long short momentum trading fund back in 2004. So do follow me on LinkedIn as well. The reason I say this is because since I've started, I don't know, since that was written about 20 odd years ago, there's just too much noise and nonsense out there on the market. So I really do want to make sure that we differentiate ourselves based on credentials because there's just, as I say, too much noise. I don't need to sell myself to you guys because you already follow me anyway. But I just wanted to make that point. As I said, the campaign for $1 million.com, got a whole dedicated website to that, tells you more about all the free tools and resources that I give, including a free downloadable copy of that, Lessons in Trading Strategy from the World's Leading Traders, which, as I said, the Financial Times published, and I wrote it many years ago when I wanted to meet some of the world's leading hedge fund managers because I wanted to be like them. So I met them, and then the Financial Times published the book, and I'm going to share those insights from those traders, people like Bill Lipschutz, who was global head of foreign exchange at Salomon Brothers, Bernard Opperty, who runs a $2 or $3 billion hedge fund now. I met all those kinds of people, and they taught me what I'm going to share with you. It's their knowledge I'm passing on. It's not as if I've got some secret sauce. I just copied what the best taught me. Now, my reasons for trading, and I'm going to tell you yours in a second, because I did a poll of what everybody said were what they want to get out of this webinar. So I'm going to look into, or I'm going to share that with you. Hi, Narendra, as well. My reasons are fun, freedom. Initially, it was just funds. I just wanted to make more money than I was doing as a barrister. And I was earning, you'll see from the barrister strikes, we actually don't get paid as much as people tend to think. And certainly not when you're 21. And now it's increasingly philanthropy. For you guys, it will start off with funds, but you need it to be, trading needs to be such that you have the freedom to do other things. Otherwise, you're not going to do it. It's like me and dieting. Somebody can tell me what I'm supposed to do and how good the results are, but I'm not going to do it if it just shackles me to the gym. And in the same way, if this shackles you to a computer screen, you're not going to do it. So I'm mindful of that. And it's also going to be fun for you. So I'm going to make sure those elements are incorporated into what I'm teaching you. Otherwise, guess what? You'll have sat in a webinar for an hour and thought, well, that's great, but I'm going to give up soon. And that's no good for anybody. And of course, as I said, part of my job is to drain the swamp. When you go on Instagram, there are a number of people who fake account me. They create fake accounts of mine, and then they try and message people and ask them for Bitcoin and all this nonsense. So just be aware, we need to drain that swamp as well by having these webinars and letting people know there's only one Alpesh Patel account, and I never message anybody on Instagram or ever private message them and asking them to follow me, okay? Your reasons, when I asked you guys, why do you want to trade? These were the reasons you mentioned. Side income came up top. People wanted to, which is understandable. And it's always been top, actually, over the last few years. Eventually leaving your job was another thing, which, yeah, eventually, if it goes really well, I want to leave my job. And then number 3 was something to learn about the markets and something to do. So that's probably the least ambitious, but it's fine. It was just that people said, yeah, I've always wondered what this trading malarkey is about, and I thought I'd give it a go and learn what it's about. And I quite like that attitude, because they're not saying, hey, I'm going to become a hedge fund manager. What they're saying is, well, yeah, we'll see how it goes. It's good to learn anyway. So that's fantastic, and I'm well aware why you're all here, and that's what I'm going to focus on as well. These are the important numbers you need to know, and make a note of this. Please try and have a notebook with you today. Keep a note of these numbers. 15 minutes, that's what I want us to look at, the trading screens. I'm going to show you what we're going to look at in a second. It's going to be these. Okay, so for 15 minutes, I'll show you how to set something like this up. All this data is live, real time, and free. I like free. I don't like subscriptions, because subscriptions are somebody else's pocket, somebody else's hand in your pocket for the rest of your life. So I don't like subscriptions. All this data is live, real time, and free. Okay, so what it is 15 minutes either a day or about an hour a week, where you scan and place the trades. How you place the trades, I'll explain. And the trades will be you either click buy or sell. Now, this kind of software is freely available. It's broker independent. I don't like anybody being tied to any one particular broker, because usually they're tied to that broker because that broker wants is giving the person promoting it a kickback. I got an email just this morning from a brokerage saying, hey, would you be promoters? We pay healthy commissions, whatever it was, for advertising. And I'm probably going to go back to them and say, yeah, my rate is £100,000, please. You never know. One day, one of them is going to say, yeah. But anyway, and they're not. But until then, it's like, go away, Mr. Broker. I want to be broker independent. So this is available for many brokers, and it's free. Okay. And the point is, look, as you all know, trading is about buying low, selling high, just like supermarkets are about buying low, selling high. Okay. Everything in life is about buying low, selling high, or selling high and then buying low later. It's just about clicking those 2 buttons, if I really stupidly simplify it. And what we need to know is, well, wait a minute, how are we going to know what to buy and sell? Can we do this with a day job? How are you going to make it fun, Alpesh? And wait a minute, how do we even open an account? How much money can we start with? Give us a little business plan and process. And that's what this webinar is about. It's not just, hey, you buy here, sell here, which is great for some of the advanced people in here, but it's also a recap on actually setting everything up, including the whole business plan. So we're going to scan, and I'm going to show you why in a business plan this makes sense. 15 minutes a day before and after work, okay? To see the trades that you should place. And I'll go into detail of which instruments. How can you do that with a day job? Wait a minute, is that day trading? What should that be called? I'll come to all of that. So don't worry about asking questions at the moment. For now, I just want you to focus and listen. Make a list on a piece of paper of your questions, and you can ask me later, and we'll do a whole Q&A session, including on brokers, how they rip you off, and a whole bunch of other things. Ideally, I want you to scan about 12 to 20 products. You're not going to trade 12 to 20. You're going to scan those, and you're going to scan them on one screen. I want you to do it in front of a desktop, not in front of a mobile phone. The reason I don't want you doing it in front of a mobile phone, although you can do this on a mobile, and it's addictive, just like TikTok's addictive and Instagram and Facebook is addictive. And that's the reason why I don't want you doing it on a phone, because you're going to start trading out of boredom. And actually, social media proved what we always knew, that once you make trading too accessible, example on a phone, as opposed to a desktop on a Mac or a PC, then people trade either out of boredom or excitement. And both of those things are bad. I want you to be professional. You should place your trade. That's it. I don't mind if you monitor it now and again, maybe on the train home from work. But the moment you think trading's about, hey, it's really cool, I can just keep tapping away. That's what the brokers want you to do, because they earn more commissions doing that. The brokers want to get you overexcited. The brokers want to say, oh, look how accessible it is. It's there even at 3 in the morning. Won't you be a cool dude waking up? And just, no, it'll make you worse. How do I know that? Well, not just from the data we have from all the traders we know, but also from actually speaking to the world's leading traders. They told me before I even experienced it myself. So I've got a couple of sources, as it were, of evidence of that. Ideally, one trade a day. And you're going to say, are you kidding me? Alpesh, I thought you were going to tell us how to get rich quick by just banging that keyboard every second and miraculously money ends up in our bank account. Sadly, you're on the wrong webinar if you want that. There's other people on Instagram will give you that. I'm going to tell you the honest truth. And actually, one trade per day, as I'm going to show in the business plan, is going to be ample money, okay? Trust me. Doing 10 a day and having bad trades and going bankrupt isn't going to help you much, is it? I'd rather one quality trade a day, focused, than hundreds. And you'll see why on the business plan this works out perfectly fine. 20 good trades per month. Okay. Now you might say, no, but every time I turn on the TV, I see all these brokers advertising these cool looking guys going on their keyboards and on their phones. And they just look cool because they're just like, yeah, I just spoke to my broker. Yeah, I just did. Don't. There's a reason why those are billion-dollar companies, because they are no longer, brokers are no longer like estate agents just matching buyers and sellers and charging a commission for their services. They're now like the casino. They are the house, because they realize you guys lose 70% of the time. So why don't they just take the other side of the bet and take the money off you? So they've got a vested interest now to increase the speed and frequency with which you trade by giving you more information, more IT solutions, more news, because those start jiggling with your brain. Now, if you don't believe me, just think what social media does to get you on there constantly. It's the same business that brokers were in before social media ever caught on. Okay. And what we've got to do is say, no, I'm professional. I know what I'm going to do. This is when I'm going to do it. I place the trade. And the great news about that is you get lots of time to spend with family and do more useful things than just faff around banging a keyboard. Target income. Now, again, I'm going to disappoint you guys. When we ask people what's the target income you're looking for from trading, the great news was the vast majority said between 500 to 1,000 a month. And that's good, because that's modest. Okay, you're not going to get that on day one. And it's not guaranteed, because the markets don't guarantee anything ever. You might have heard the past performance is not a guarantee of future. What they've often miswrite is past performance is no guide to the future. Well, actually, that's nonsense, because the past is some guide. History is some guide. It's not a guarantee. That's what they mean. It's not a guarantee. And so there is no guarantee that you're going to get the markets going up tomorrow or forever again. There's no guarantee of that. But there's some guidance that they probably will go up at some point in the future, for instance. That's what I mean by the difference. Now, 500 to 1,000 a month is going to be ample for most people, okay? It's the difference between paying down credit card and not, paying energy bills and not, paying mortgages, rent down and not, okay? The difference between rich and poor is not millions and gazillions, which will probably cause you to take way too much risk. It's actually taking a little bit of risk in order to make a tiny bit more, which makes the difference between rich and poor, and then gradually building up. Now, you've probably heard that before elsewhere, probably from a parent. Go slow, build up gradually, as opposed to, hey, just be reckless. Take the car out on the motorway on the first day you passed your test. Okay, we're not going to be silly. And we're going to see, well, okay, let's put that into our business plan then. 500 to 1,000 a month, bit modest. Well, remember, if you've got the skills, and this is about learning the skills, if you've got the skills to make 500, then you've got the skills to make 1,000. If you've got the skills to make 1,000, then you've got the skills to make 2. And if you can make 2, you can make 4. You can make 4, you can make 8. So why risk lots of money on day one? Unless it's a broker talking to you, in which they'll be happy to say, oh, please hand me your money, because they want uneducated, uninformed people with lots of money trading frequently, because they're the ones they can take the money off sooner. And they know it's a competitive marketplace where other brokers are thinking the same. So we're doing the exact opposite of what our adversaries, the brokers, want us to do. So that's got to be a good starting point. Now, you've probably seen things like this. You might have said, wait a minute, you're saying 500 to 1,000 a month. This came up in a book that I was researching on what did private investors have in common with hedge fund managers, you know, the profitable private investors. Now, 30% of private investors make money, 70% lose. The brokers have to announce this. They have to put this on their websites. They have to declare this, okay? So we know that data exists because the FCA requires them to put this. So we know that that's the case, okay? So that being the case, what do the 30% more profitable have in common? By the way, I don't know SpreadX. I have no affiliation with them. I don't even know if their figures are true, though I suspect they are true. Okay. The reason I'm saying it could have been any broker, and the data's old anyway. So whilst you might see figures like this, oh, the top trader made $1 million and the top 100 on average made 100,000, we're not going for those figures. Okay, we know unlimited spoils could be made. We're actually going to start small, like the tortoise, not the hare, and we're going to see, can we actually just learn the skills to make 500? The reason I say this is this: even Lewis Hamilton had an L plate once. So you're not going to go in a Formula One car on day one. You're going to put the L plates on. We're going to drive around in the Tesco car park first before you then go onto a normal road, i.e. live trading, well before you go onto a motorway, which is, I'm going to do this for a living. All right, that's the order. The mistake most private investors make: hey, Alpesh, can I go on the motorway on day one and just blow up the whole car? Okay, we're not going to do that. I know I'm going to sound boring and dull, but I've been in this business long enough to know what makes money and what doesn't, who makes money and who doesn't. When we hire people in my firm, we start them with $1,000 of my money. Can't give them client money, I'd be fine. Okay, $1,000 of my money, and then they learn with that. In fact, they'll start with a demo account first to really make sure they don't mess things up, because I don't want to keep giving them new fresh thousands if they keep having fat fingers, and then $1,000. Okay, it's as simple as that. Now, important points. It doesn't matter what you buy and sell. People sometimes say, oh, I only want to buy stocks, I only want to buy Google or whatever else. Right, I don't care. Like a supermarket, I don't care which of these things I'm buying and selling, as long as I can buy low and sell high. Buy low, sell high. That's my job. Okay, I don't care which of these, and I'm going to go into these and look at the instruments in a second and what we're doing and how things look today. And I know there's a lot of earnings figures and everything else coming out. By the way, I should say, with all the news, just so you can tell, because somebody always goes, is this live? Well, yeah, there's Amazon at the moment. Now, we got a short signal on this just before the webinar. Whoops, we got a short signal on it. And that's where we are on it. Sorry, this is Central European time, so it's going to be 2 hours ahead of, well, it depends where you are, actually. I'm in London at the moment. So there you go. That was the short signal. That's where we are at the moment. That dotted line, I'm going to explain all of these numbers and everything to you. Dotted line is where we add to our winning position. Because it's a short, so we sold at 105. It's now falling, so we're in profit. Okay, we spot 105, spot 55. It's now at spot 15. We're in profit. We'll add to that position there. We had a long position earlier yesterday, okay, there, and then the market exploded to the upside thanks to Microsoft's earnings and shot up, and now there's some profit taking, mild profit taking going on. But I'll explain all of this, and that's you know, picking up money. That's what each of those trades are intended to do. I'll show you the good ones, the bad ones, when things go right, when things go wrong, and how to limit things. But I don't care whether it was Amazon or euro dollar. And that's what I'm going to teach you, because when I go to Starbucks and pay for an overpriced latte, they don't ask me, where did you earn the money? Okay, never pay for subscriptions. Anybody who's trying to sell you subscriptions, they've got a conflict of interest to make you keep going and keep paying forever and ever and ever. So I don't like subscriptions. Avoid any service tied to a specific broker. As soon as somebody says, hey, open our service, you've just got to open it with this broker. They might give you a selection of brokers, but say, oh, ours also works with any broker. That's fine. But ask them, hey, do you get a kickback from that broker? Okay, if that's the case, then their job is to make you lose money. They're not telling you that because they're getting a kickback of the share of the losses. So there's people out there, double decker, I mean, I don't want to name names, but there's people out there whose job it is just to rip you off. References must come from industry leaders, okay? References, and I'm going to show you my credentials, which are published in the Financial Times and in the books from some of the world's leading hedge fund managers. But that's got to be the level, because it's money you're talking about. So it's not me saying, oh, look, aren't I great? No, that's not the point. The point, and the reason I say that is because in a marketplace which has a swamp, it's your money. So you better find out that the people really know what the hell they're talking about. And my teachers are the world's leading traders, and they're interviewed in here. You can download the book so you can check their credentials as well. In fact, one of them just won Hedge Fund Manager of the Year a couple of years ago, Bill Lipschitz, former global head of Forex at Salomon Brothers, who's the world's largest Forex trader. Okay, that's the standard. And what amazes me is how much risk people are willing to take and say, yeah, just saw a bloke off Tinternet and didn't do any due diligence, didn't bother looking to see if he had any credentials. I just went ahead and used a broker he told me to use, and now I'm down 10 grand. That's what actually goes on with most people, and it shocks me, it worries me as well. So please, as I said, do follow and me on LinkedIn. And there's another point to that. You'll also get invites. I've got an event coming up with Investors Chronicle, which is published by the Financial Times. I've got an event coming up there as well. You'll get invites to these things. So do come to that. Now, let's talk trading strategy. Let's talk business plan. All right. This is what it is. It's just buying higher than the price. So there's only two decisions to make: when to buy, when to sell. So how come, if that's the case, if it's just two decisions to make, how come, and I've taken screenshots from 3 different brokers, 66% of accounts lose money with this broker, 66% with another one, and 61% with this one. Okay. And by the way, if you've got other brokers who give better statistics than that, let me know, put it in the chat box. My point being, so I think it was IG, CMC, and Saxo whose I took. This is a while back, so they might have changed. They might have more losses now, and they'll change those numbers based on how much profits they want to make out of you. So given you've only got a 50-50 decision to make, how come it's not 50% lose money? Let alone the fact that given you've only got a 50-50 decision to make, let's have a look at sterling dollar, okay, or cable. Now here we go. That was a short on, and each one of these bars, by the way, is a 30-minute bar. So when people say, can you day trade? Yeah, you can actually day trade, because you'll be holding these from the 25th to the 25th. So that's, you know, one day on a 30-minute bar. You'll be holding it for a day, and you can go to work because you can put an order in to say, if it hits my stop loss, exit. Simple as that. So that's not a problem. I'll show you how to do that in a second. And then that was a long, which was great. And we added to that over there. The point with it is, okay, doesn't matter what instrument it is. There's only two decisions to make: when to buy and when to sell. You get the same data pretty much. If you look at the rate there that a broker will give you for sterling US dollar right now, there might be a slightly wider spread than, say, George Soros would get, but it's not going to be much different. So you get pretty much the same live data. You get pretty much the same prices. So how come 66% or 61% lose money? Well, the good news is that means 40%, roughly 35 to 40%, are making money. So let's see if we can get you in the 35%. Now, that's great. As an entrepreneurial side gig, and I think trading is the best entrepreneurial business in the world, as an entrepreneurial side gig, it's the best in the world, because most businesses fail in 90% of businesses fail after 3 years or within 3 years. Okay, this is saying you've got a 30% probability of being profitable. So the odds are better. I like it because there's no warehouses, there's no massive cash outlay, there's no offices, there's no insurance liabilities, there's no staff costs. We're trading, so it's a great business. It's the most efficient business. You don't need to advertise the market when you want to sell, I don't know, Google shares, or you want to buy them. You don't need to pay any advertising costs, because guess what? It's there. The marketplace is efficient. So it's a great business. So how do we get on to making the kinds of money that some of the big boys make? Well, and the big girls. Let's take that was a short. So anytime you see a red arrow in here, it means our system showed us a short. So that was a red arrow, a short, that was a long. Now, let's say there's 3 traders. Trader 1 doing exactly that trade and then taking a long trade over here makes, say, £500 because they've got less capital. Trader 2 on exactly the same trade makes 5,000. Trader 3 might make 5 million. Okay, trader 2 might be an ultra high net worth, so they make 5 grand in a day. 500 might be a retail client who called it right twice, and 5 million might be a hedge fund, and they've got more capital. The only difference, my job at the end of this webinar, is to make sure the only difference between their know-how on one specific aspect of trading, not on everything, but their know-how on one specific aspect of trading and yours, should just be the size of capital. It shouldn't be other things beyond that. Okay, so we want to try and neutralize and level the playing field on everything other than size of capital. They've got more capital, because if we can teach you the skills for trading, if we can teach you the skills, then finding capital becomes your only problem. You might say, well, that's a pretty bloody big problem, finding capital. Well, actually, if you've learned the skills, you'll find capital from friends and family, as I did. Once I learned the skills, getting capital, I wasn't born with a silver spoon in my mouth. Getting the capital didn't become a major problem. And don't forget, there's a hell of a lot of instruments to choose from. Okay, each of these at different points will have trends. So we can buy low, sell high. A trend is just the ability to buy low, sell high. It's the only way profit's made in any business: buy low, sell high, or sell high, buy low. It's the same thing. Okay, now whether you do indices, commodities, crypto, stocks, forex, and for those of you who are into crypto, put it in the chat box if you're into crypto. because I'm going to share with you. That's the Bitcoin trade, and you'll have seen it's been fairly volatile. There was a long trade which nothing amounted to it there on the 11th of April. The short turned out great on the 16th of April, and then another long over there which has turned out good as well. Okay. But that's not the only thing. You might do slightly longer term. These are 4-hour bars for the FTSE 100. And at the moment, and the reason I wanted to show this is, for the first time since 20th of March, we've got a new signal, and that new signal is to short. Now, if you watch my Telegram weekly market updates, you'll know I've been saying this about the FTSE for a while, that I think it's overbought and a bit toppy. So if you look at the Telegram channel that I do with my weekly updates, or on YouTube, you'll see that I said that. Now, that's going to make us money. That's the only insight I need. It's the only skill I need. Do I need to know why? Do I need to know Bank of England? Do I need to know budget deficits, political? What factors could go into this? Now, I've got a master's degree in economics from the #1 university in the world, and I can tell you the same thing my tutor told me on the first tutorial I had, because I was trading then and he knew it. Nothing in that degree will make me a better trader, and he's absolutely right. Trading is not to do with macroeconomics. Not the trading we're doing. We're buying low, we're selling high. All right. One of the first investors in my hedge fund was the founder of New Look, the clothing retail chain. Now, if you asked him, are you a fashion expert? He'd say no, but I know what I can buy low and I know what I can sell higher. And that's all it's about. You don't need to know every single thing about anything other than, can I sell this higher than the price at which I bought it? That's what we're focused on. We're going to come back to all of that in a second. And the instruments we choose, well, that's really up to you. But on trade selection, I'm going to show you, I really want ones which are moving smoothly and are not volatile. And you might say, what? That's the exact opposite of what we had. No, because if prices keep going up and down, how the hell am I going to latch on to getting the start of a trend? It's going to go up, it's going to go down, I'm going to get whipsawed. So I want the kinds of moves which are, and here's Google. And by the way, for Google, I've shown the weekly chart because I own this long term. So I just wanted to show you that, yeah, we were well aware at the start of the year that when we bought more of it, that might well go down, because this is just based on this, not on fundamentals, and we're fine with that, and we'll buy some more as it does, and we did buy some more. So we knew it'd be an opportunity to buy more into it, and that's fine with us. This is the longer term selection. Okay, so lots more to do. So how does trend following or momentum trading work over the long term? Okay, or over this? That's buying low. I've got some questions. I'll answer them. I do have DAX. I've not got DAX up yet. DAX is one of my favorites. It just tends to move more smoothly. I think it's something to do with the Germans. So Oscar, going to cover crypto, going to cover value investing and trading as well. Yep, I'll do more of the crypto then, guys, as well. Thanks for letting me know. I'll do some more of those as well as, so I've done Bitcoin, but I'll show you some of the others. Now, by the way, trading at the moment still works a little bit better on crypto than it does on Forex, let's say. And the reason for it is the big banks aren't doing crypto. So the trends tend to be smoother. They tend to work a bit better just because it's mainly largely retail, but it's some institutional. So during the banking crisis, which is right now, that's JP Morgan. I was on the BBC yesterday. You might have seen, and you'll see the video on my LinkedIn, talking about the banking crisis and results from UBS. Now I hold JP Morgan for the long term. But the great thing about something like this, trading as well, is you can have your long-term investments, but because you can trade to hedge, so you can trade and say, right, that's great. I'm long here, but I'm now short, which means my long-term position will get paid by the profits from selling this short and buying it back later. So at the moment, we're short on JP Morgan. But notice how it can still, even during moments of crisis, capture. And that's because these trends are really smooth, or rather the prices, they're not too spiky. There's the odd one here. It's a really difficult one. Even when it leapt out, it held on. So that was, I mean, you might say, well, you just got lucky there, Alpesh. Bloody hell, banks? You want to trade banks? You might be right, in which case, stay out. I'll show you another one. That was the last month of 2022. Now, this is uncharacteristic. That's the S&P 500. And this is uncharacteristic. It was uncharacteristic in this regard. If I took a typical month, okay, that was a losing trade because that was a short, right? That was a nothing trade because it was a long and then the price didn't really do anything. So scratch that one. That was a small win, so we'll ignore it, okay? Now, then we've got a pretty big win. We've got another small nothing win, another big win, another big win, another big win. Okay, then that was another short, another medium-sized win, and then another win here all the way up to here. That's not typical to have so many large wins in a month. So when I mean volatile, I don't mean it can't go up and down. What I mean is it shouldn't go up and down every minute of every day. It should go up and down over a period of days so you can latch onto it. Okay, that's what I mean. There's a subtle difference. I want it to be volatile over 2 or 3 days, not volatile every minute. That's trade selection. That's my number one job to teach you, believe it or not. The other bits I'll teach you about where stop losses go, where you add to winners, and all the other rules in the next, I think it's in 1 or 2 slides ahead. But actually, trade selection is the most important thing, because once you've got the skill of trade selection mastered, okay, then raising more capital just becomes a business function. Oh, my job, what are you doing today, Alpesh? Oh, we've got to raise more capital. That's what I do in the hedge fund. I don't sit in front of a screen all day. I've got staff to do that. My job is to go meet investors and raise more capital. Okay, so that will become and should become your job. Once you've got the core product right, it's just a question of putting more money behind it, right? Or take the big oil drop. Now, again, I'm showing exceptional periods. Actually, it should be able to latch onto these during non-exceptional ones. Let's look at Ripple. Okay, that's Ripple. Some of you said you like crypto. So that was the short. Nothing happened. Let's just have a look here. There was a long beforehand, which didn't make too much. Now, here's another important point. Oh, Alpesh, look, you didn't make that much on the long trade. Yeah, I can't take from the market what's not there. The market didn't give us more. It didn't keep going up and up and up. What do you want me to do? You know, oh, Alpesh, what? You mean you can't, through telepathy, just move the market? No, I can't. Okay, the short trade went flat, but then this was okay. That was good. And where there's the dotted line, I'll explain why that's there in a minute. That's where we add to our winners. And why? I'll explain that as well. And the yellow line is where the stop loss is. And it's a trailing stepped stop loss. And I'll explain what that is as well in a second. Okay. Now, 85 to 78 is what that went. 85 to 78. Now, at $10 a point, you're not going to start off like that. Don't do that. Don't do $3 a point or £3 a point. Don't even do £1 when you're starting out. Start with a demo account. All right. The only people who tell you to start with £3 or £1 are ones who are trying to sell you their brokerage and they're getting a kickback from it, because they need to get you while you're ignorant so they can take your money off you. Nobody's ever going to say to you, no, start with the demo. They're going to push you and call you to open a live account. Those are bad people. Okay. At $10 a point trade, that's $7,000 profit in one day. If you did $10 a point, you won't do $10 a point. You might do that either if you're rich or when you've had a bit more experience. Once you're consistently profitable on a demo account, then you can look at doing increasing your trade size. And by the way, this doesn't mean it's spread betting. It doesn't mean it's CFDs. It could be options. Everything can be converted into pounds or dollars per point or per pip. Okay, everything. Even if you buy shares, if the share moves 1 pence, then you can work out, well, I'll make £50 for every penny it moves. Whether, you know, if you've bought £5,000 worth or whatever, the maths works out at. Forex and crypto. This is Bitcoin. 2023 it was into the first week of January. So in the first week of January, it fell. That was 100 points. You guys who know crypto tend to know every price movement that's ever happened. So I'm sure you're well aware what happened in the first week of January. That's 170 points. Then nothing. Then we had a green. We had an up move, and that was 250 points. Now, I'm well aware with crypto, we might get a signal like a sell, but it may well just be the market faking us. Nothing happens. Okay, because we see that 1, 2, 3, 4, 5. There were 5 trades where actually it just went nowhere, and that's fine. That's just the nature of the beast. But we also know if we're patient, we will get ones like this: 170, 100 points, 250. Now that's 420 odd points right there. Therefore, more than that. What will that work out as a pound a point? Well, if it was a pound a point, it'd be £420. If it was £10 a point, it'd be 4,200 in the first week. All trading, and I'm going to show you the strategy and the business plan in the remainder of the webinar. All your trading performance will look like this. My job is to make sure you never have any big losses. That's the critical factor that all hedge funds have in common. It's all successful billionaires have in common. No big losses. Okay, so we're going to show you the strategy which makes sure of that. And yeah, I'm afraid there's going to be a lot of small losses and a lot of small wins. Why can't they just all be big wins? Well, first of all, I don't have a crystal ball. That's why they can't just all be big wins. Okay, that's one reason. The other reason is that you don't have big wins. The markets don't just keep moving in one direction, and often we enter a trade and then, I don't know, Donald Trump does a tweet or something. Well, I can't do tweets anymore, but you know what I mean. Something happens and it becomes a smaller win or a small loss. The small wins and small losses will cancel each other out. They're just the cost of doing business. It's going to look like this. Anybody whose performance doesn't look like this is either defrauding themselves or trying to defraud you. It's as simple as that. So anybody goes, oh yeah, I did really well trading. Blah, 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 blah. Oh yeah, show me. I mean, they're not going to do a bar chart. Show me a bar chart of your winners and losers, and this is what it'll look like. And I'm afraid it's going to look like that for you. The money is made here in the big wins, of which there are only about 15 to 20%, and making sure there's no big losses. Guess what this looks like for private investors? They have exactly the same as this. Private investors have exactly the same as this, except guess what else they have? They have big losses. Okay? Otherwise, private investors are exactly like this, except they have big losses. It's the only difference. Okay? Now, trading strategy. So let's do trading strategy and then do the business plan. Okay? And it's this. Selma, stop loss. Where do we put that? Entry. How do we know when to enter? Which is what most people are obsessed by. But actually, it's the exit, which is more important. But anyway, we'll look at entry. Limit order, which means when to take a profit. If you do that at all, and I don't like capping profits. I don't like taking profits. But as a beginner, I recommend you do take some profits, and I'll show you where to do that. Mind, which is how do we avoid trading psychology problems of greed, fear, all of those. Well, we're going to have an automated as possible by having these, by having our rules within a process. Oh, by the way, JP Morgan's falling further. So I've got a long position in that, which I'm going to hold for the rest of the year as things stand. So that's fine. You might say, oh, well, your investment's going to pot up. No, not really. Because, and we've added to that losing position because it's hit the dotted line. I'll explain why and what all this is in just a second. But I'm making money on the short, which is paying for my long position. So hopefully by the end of the year, the long position will be in profit and the capital amount that I invested in will be risk-free because I'll have got it all back from the trades, the short trades on it in between. That's hedging. Okay. That's how we do the hedging part. Money, how much money to put into a trade, that'll be in the business plan section, and additional positions when to add to winners. This is the chart. This is the probably third most important chart I'm going to show in this webinar. The second most important and the most important I'll come to in a second. Third most important. So take a picture of this if you wish, right? I'm going to tell you everything in this one chart. Right, you can, let's start off with point number one. All the best hedge funds, and if you want proof and you want to say, well, you just said that, Alpesh, how do we know that? Financial Times published this book written by me, Mind of a Trader, Lessons in Trading Strategy from the World's Leading Traders. So all the leading traders in the world, including hedge fund managers like Bernard Opperty in there, people like David Kite, who's in the UK, richly, he was a Brit. I went to New York, Chicago, and London to meet the traders. And Bill Lipschutz, global head of Forex at Salomons, they all had one thing in common. They had volatility-based stop losses. Now, I didn't know what they were. Somebody said to me, imagine you go in, and they knew I was there. I mean, Bill knew I was there, because what I really wanted to ask him, so Bill, you're really rich at trading. How can I be really rich at trading? I mean, I was a student at university when I met him, and he knew that's why I was really there. But we printed the whole interview, and you can download it. I'm going to, at the end of the webinar, give you the link to download it for free, the whole book, actually. As part of my campaign for 1 million to just teach more people how to do this. And all of them had these volatility-based stop losses. Now, what that means is the more volatile the market, further away the stop loss. You're going to have a stop loss. I'm sorry if this is boring and you thought all I was going to say to you is, hey, buy if it's half a full moon, quarter moon, and it's a Thursday, and the first Thursday of the week, just buy. No, I'm afraid this chart, and it's only this chart. Come on, this is the most technical chart you've seen so far. Okay, so it's not too much to ask. And I've run everything past my wife, who knows nothing about trading, to make sure it was all simple enough to understand. So if you want to go from advanced to genius level, this is the chart. If you want to go from zero to beginner, this is the chart. Volatility-based stop loss means the more volatile the market, in other words, the more up and down these, it doesn't matter what time frame these bars are. So this is 4 hour, but they could be 3 hour, 2 hour, whatever. The more volatile they are, further away the stop loss. It's a volatility-based stop loss, VSL. Okay, the less volatile the market, closer they are. Now, why is that? Well, because if the market's more volatile, then surely you don't want to be stopped out by noise. Okay, therefore you put your stop loss further away. That's genius. So how do we work out what that is? Well, you might use experience, which is what a lot of traders do when they've got experience. But before you've got experience, you might say, well, let me just by eye look at the last, I don't know, 14 bars and say on average they move up and down 10 points. So I'll put that 2.75 times that. So I'll put that 27 points away. That's one way to do it. Or you could use something called the average true range. It doesn't really matter what. It's the principle that's important. It's the principle, not the exact number. Some people go, should it be 2.75 or 2.756789 You know, they're obsessed with numbers as if there's some secret number. Okay. I know having no stop loss is too risky. And I know having one which is right behind my entry level is too stupid. So about 2.5 to 3 times away is about right. Okay, so volatility-based stop loss, point number 1. In Selma, that's the L. And by the way, on all of these, let's just show you, where's GBP USD? I don't think I showed you this earlier. Okay, let's just show you this one. Now, look. Oops, there we go. That's GBP USD, okay? And that's live. That's right now. It's 1.24. As if you followed me on LinkedIn and Telegram last year, you know I made an absolute killing when this almost went to parity, and I was screaming everywhere to everyone to say, for the love of God, start buying pounds because you're going to make a killing. And I said I refuse to sell pounds just on point of principle. And then Crispin Odey got slated in the newspapers for being such a shit and selling sterling at a time of pretty much national crisis. But when the time came to buy, I said, buy it. And he tried to redeem himself, the greedy fat so-and-so. Excuse me, but I really hate him for doing what he did. And anyway, it went up. And that was a bit of a killer trade. Sterling US dollar. It's all there on LinkedIn. It's all there on Telegram, so you can watch it. But that was once in a 20-year opportunity. Where are we at the moment? We're short on that. Now, can you see that dot? Oh, no, not that. Can you see the yellow line? That's above because it's a short trade. See that? That's the stop loss. It's a volatility-based stop loss. If the market was less volatile, it'd be here. If it was more volatile, it'll be up there. Okay? It's as simple as that. It's as simple as that. Volatility-based positions. Like, let me just actually... That's a 30-minute bar. That's the same. If we swim across to the 1 hour bar, you can see it's the same rule. Okay, it's the same rule. Short, and that's the long, and the yellow lines there. We've not kept the yellow lines on previous signals because otherwise it'll just litter the chart with loads of yellows and dots. I mean, you couldn't read anything then. So you can see it there. And that would have had its own stop loss, probably somewhere up here. Okay, so that's always there. There's always got to be a stop loss. Now, I want you to also write down one other thing, which is losers add to losers. I didn't invent that. A famous hedge fund manager who's incredibly successful wrote that. Losers add to losers. Okay. Raj asked, would gold be too volatile to trade? I don't know. I've not got gold up there, but I can look at it in the Q&A later to see if it's too volatile. Probably not. And it's also about the time frame as well. Okay. So, and remember, that was sterling US dollar. I mean, some would say that's really volatile, Alpesh. How the hell are you trading that? What I mean by volatile and trade is this. Look, so that's sterling US dollar. Oops. Let me just stop that a second. Okay. But look, starts there. It went all the way. So is that volatile? Yes, it's volatile because it went from 1.24 to 1.25 in the space of a day. It's volatile. What I mean by volatile is not that it moves up or down. What I mean is it moves up and down, not over a day, but over a minute. So it's just going nuts every 5 minutes. So that's, it's spiky. Okay. That's not spiky, obviously. Smooth, nice, smooth trends. The other one that I posted on Twitter just before this webinar started was, I think it was euro dollar. And I just said, I can't believe how well behaved it is. Now you might say, well, surely that's volatile because look, it went from all the way up here to all the way down here and then all the way back up again. Yes, but look how smoothly it did it. In other words, each bar in each period, and that's 30 minutes, it was range bound in each 30-minute bar, pretty much, other than that one. It wasn't moving up and then down, up, then down. Does that make sense? Can you see how smooth that trend is? Okay, it's not spiky. And that trade selection is what I don't expect you to get it over a course of one webinar. It's what we teach people is trade selection on that. So that's one. Number two, volatility-based position sizing. Now on our software, we have that written up there for my trainees in my firm. We give them this when they join my firm just to make teaching them, training them a little bit easier. So it was created before it had to be all done manually. It was created just to train new recruits into the firm. We hire people fresh out of university because they're cheaper. We can't afford people. We've been doing this now for over 10 years as a fund, well, more, 15 years, and we haven't got to $1 billion of assets under management. We're well shy of it. So I'm pretty much consider myself a huge failure in my industry because by now we should have had $1 billion of assets under management. But as I always say, we go in when we're looking for cash after Goldman Sachs and before Morgan Stanley. So who's the big pension fund going to give it to? Anyway, but we do have some big institutional investors like Aegon and AXA as well. VPS, volatility-based position sizing. In other words, the more volatile the position, i.e. here, and the further away the stop loss, the smaller the position size. So the risk of loss, whenever your stop loss is hit on whatever you're trading, is always the same amount of money. You don't lose more money just because the market's more volatile and the stop loss is further away. You can easily do the maths on that if you think about it for 2 seconds. Stop loss is further away, you reduce your position size so you don't lose more money. I.e., more volatile the market, you're not increasing your risk just because the market's more volatile. Think of the genius of that. You are not increasing your risk of loss just because the market's more volatile because you've reduced your position size. That all comes back to making sure you don't have big losses. So rule number 2, volatility-based position sizing. This is why this chart is so important. Okay. Number 3, winners add to winners. Now, you saw where I've put this from the entry. I've put this down here. So the mirror reflection of that on this side is this dotted line. That's where we add to the winners. So write that down, winners add to winners. Remember I said losers add to losers? That was all about making sure you don't have big losses. Losers add to losers is one reason. Having a stop loss is one reason. Having volatility-based positions, I think, is another reason. All these things will stop you having big losses. Now let's look at the other side of the equation, the big wins. The big wins, therefore, come from when you add to a winning position. But that's only going to happen 20% of the time that the trends are going to be big. So what's genius about doing it this way? It wasn't me who invented it. It was all the successful hedge funds have an approach like this or a variation upon it. And the variations are all very simple. Okay. And they're all trying to buy low, sell high. Some might get in maybe one figure earlier, one figure later. Some might even get in a lot earlier. Well, they're better than I am. And I'd probably say, see where we got in there? I'd say if you're a bigger and better hedge fund, you're going to get in here. If you're one of the world's greats, you're going to get in here. That's all it is. That's what it is. And you might say, well, why can't you get in there? Well, because I don't have hindsight or a crystal ball or $100 million supercomputer, which some of them might have. Do you see what I'm saying? All we're playing for in my industry is if I spend money that I don't have on IT, I'll move that a bit earlier and make a bit more. And you might say, well, why don't you borrow loads of money and get the IT and then do, well, think about it. That'd be a high risk. This is fine. This is fine. Okay, so winners add to winners, losers add to losers. Now, winners add to winners, which gets you more on that right-hand side of getting some of those big wins. Okay, it's as simple as that. But I've still left out some very important things. One of which is, well, this stop loss, does it just stay there? No, it's trailing, but it's stepped. In other words, only when the price goes from this entry up to here should this stop loss move up to there. It doesn't trail point for point, which is called dynamic. Why? Well, because that gives less room for error, and you need a bit of room for error. So try and do trailing stepped. By the way, if you're a beginner to all this and you're thinking, wait a minute, you start off with just, oh, I buy there, sell there. That's simple, Alpesh. It still is that. All you do is you just make a note of where that is, and you can tell your broker if you're going to go to work, you just tell your broker when the trailing step stop loss gets hit, exit. So let's say this goes up and up and up and up and up, and then pulls back a little bit, hits the stop loss, you exit. If you're going to be at the computer, you'll get another red arrow, and well, you get an arrow in the opposite direction, so you know to exit. So it's up to you. If you want to be in front of the computer because you're retired, you can do that. If you want to be away from work, you can do that. Either way, there's a process in place. Okay. Keith asked. So Keith, this is all, it's a free software called MT4. The signals are our own that we've done, but I'm teaching you the rules to create your own rules for entry. But the software is MT, M as in Mike, T as in Telegram, and 4 as in the number 4. And it's freely available from the internet. It's not, there's no subscription fees, and most brokers offer it for free. Okay, I've got no relationship with MT4. I've never met anybody from there, but because it's free, as you'll know if you read my FT columns, I try and find sources of data and information which are free. It's free for life, so that's what I like about it. And then we've just added on there our own indicators for our own team to teach our team, because it's a hell of a lot easier teaching trainees when you don't have to spend millions of pounds on them. And so that's our software, this part, okay? But you can replicate that, because that's what I'm showing you. You put your stop loss, as I said, you add to winners. Those are the principles you're going to have to follow. If you don't do those things, you're screwed in terms of trading. If you don't have volatility-based stop loss, volatility-based position sizing, and the other rules. So the last thing we need to look at is, well, wait a minute, where's the entry? How did you know to get the entry? In Selma, where's the entry? So I'm going to come to that. By the way, can I, right at the end of this, explain to you some technology that my hedge fund spun out, which we hope to get venture capital investment for, and then hopefully even IPO, because tech companies make more money than anything else out there. So some financial technology right at the end of the webinar. You don't have to stay for it, but I'm going to tell you in the last 10 minutes. The reason I ask your permission is this. I don't want people to say, oh, you gave us great content, it was amazing. Then you told us about your own personal ambitions and what you want to do in fintech and what you're doing. Thanks, we hate you. You know, that does sometimes happen. This is a slide from a multi-billion-dollar hedge fund. They're out in Hammersmith. It's called Winton Capital. David Harding, or Sir David Harding, is the person behind it. And this is one of their slides. And this is what we're going to be doing. Okay, just like the leading traders that I interviewed for my book, Mind of a Trader, this is what we're doing. It's the same principle as was in there, which is, you know, a trend starts, there's a bit of a lag, and then we buy. It peaks, there's a lag, and we sell. Now, this is from a multi-billion-dollar hedge fund. The reason I wanted to get this picture out there is because people say to me, what, you couldn't see the bottom of the market and the top? You don't have a crystal ball? You're rubbish. No, nobody in my industry has a crystal ball. What they have is algorithms or rules, which I have here, to help you buy, okay, after a slight lag, okay? All right, that's what I'm doing. Kishan, I'm going to give you the details. We're going to give you all the details, so don't worry as well. I've got material covering that. All the obvious questions, it'll all be covered. Then the thing we've got to cover is the entry, because that's the only bit that's left. I've already told you on the stop loss. By the way, JP Morgan now falling even more, which is good, not for my long-term investment, but it's good for my short-term investment, because that short. Now, notice how I didn't sell short here. You know, I wish I had 2020 hindsight, 140. I got out at 137 or 136 and change, or roughly there. Okay, so there were about $3 I could have made. And I've made $3 in profit anyway from that short, and that's fine. And I'm not even looking at the news. Look how I'm not looking at the news. There might be a news story that First Financial's gone bust, and there's a bank bailout, and JP Morgan are going to sell it, or there's a run on all the banks. Who knows? But that's the whole point about trend following as well. I don't need to be looking at the news. And the whole point of proving that to you is I'm speaking to you good people. Okay, so the reason I want to show you this is to say we do not have some special knowledge above you guys, which lets us get in there. What we do is have certain best practices. Volatility-based stop loss, volatility-based position sizing, winners out to winners, losers out to losers. Okay, those are the things. Now, the entry I've got to give you, which I'm going to give you the rules for. Actually, the person I got all this from, one of them was this chap, Bill Lipschutz, global head of Forex trading at Salomon Brothers. When I met him, his chairman was Warren Buffett. I interviewed him for my book, Mind of a Trader, Lessons in Trade Strategy. You're going to get a free download of that just for doing me the honor of being on my webinar, because I like to bribe people on my webinar so they go away and they say, you know, Alpesh Patel is a good guy, and they tell 100 other people. So you're going to get a free copy of that, which normally would be $24.99. Okay, so let's look at the business plan, and then finally the entry. That's my mum. Makes an honorable visit on all my webinars. There she is. I do not know why the now king is bowing to me, but I'll take it. Thank you, Your Majesty. That's the business plan. Okay, is it all worth it? So Bill said to me, you know, trading is like driving a car. You've got the side wing mirrors, you've got a steering wheel, you've got a rear view mirror, you've got an accelerator, you've got a clutch, you've got a brake, you've got your, just like with trading, you've got stop loss, entry, limit order. But guess what? You learned how to drive, didn't you? You learned how to drive, and it was fulfilling. And you can learn how to trade. By the way, I don't have that car anymore. I've got a £100 bicycle. Somebody asked me, says, have you still got the car? I said, no, I got older and I now cycle around London because what's the point of driving? That, and my wife took one car and my dad took the other, but it's all right. I should say I'm still married to my wife. I mean, I gave her my car to use. The road to returns, just too much information. Maximum loss. Okay, so this was the business plan Bill Lipschitz said we had to go through. He said, look, first you need to work out whether any of this is worth it and how much can you make on the parameters I told you of 1 trade a day and 20 a month. How much can you make anyway? Okay. Oh, by the way, just in terms of some of the longer term investments, because I mentioned that, and I know this is a trading webinar, but some of you will know I own Nvidia. So that's been great. That's been the best pick so far this year. Okay, Nvidia, you can see it there. Purchased in January, and it's gone from 167 to 268. So thank you, Nvidia. Some of these are leveraged, 2 times leverage. Nvidia isn't, you should know. But some of these are 2 times leverage. There's the stop loss. It didn't come anywhere near it. That's where we added to our position in NVIDIA. We doubled down on it. Okay. That's the trading rules. This is not how we pick our investments. That's how we pick our trades. Okay. On there. And the FTSE futures are falling even further and faster, as you can see here. And as I said already on my weekly updates, I'm negative on the FTSE for the moment, and then there's been a lot more negativity in the news. The news tend to catch up a few days after what we see on screen here, so this gives us enough of a head start, and then the news adds momentum, even more momentum to it all. Oh, just finally, before I go to the business plan, one more you need to see. Microsoft, this is the weekly, and as you know, I'm long on that, and as of yesterday's news, I'm even more long on it and happy with it. That was purchased, well, it's purchased a long time ago, as you'll know. Also, importantly with Microsoft, when we had this down period, that didn't really bother us too much because we had a long-term buy on it anyway. Okay, so Microsoft's still very much long on, but that's not trading, that's just investing we're talking about. But I wanted to show that because I know some of you are here just for the trading side, the investment side. Google, I think I mentioned earlier, so I'll come back to all that in the Q&A. So Bill said to me, imagine you've got £20,000, and I was at university when I met him and we did this business plan. Remember, Bill Lipschitz, global head of forex trading at Salomons. I said, I don't have anything like that. And he said, no, but you're making a business plan to determine whether or not you want to have a life-changing decision of leaving the law and doing this full time. So let's work out whether or not it's worth doing by working out how much capital you would eventually look to have. You're not going to have a great business and say, I'm never going to have any capital in it. Okay, so I said, okay, I get it. I get it's a mental exercise. So we did this. So we wrote down £20,000. That would mean maximum loss per trade is £200 because 1% of total capital. So when that stop loss, that yellow line is hit, our trade size would be such, your trade size would be such that you don't lose more than £200, 1%. I said, okay, that makes sense. The win-loss ratio, let's assume you're better than a coin. A coin's 50-50, isn't it? So let's say with all this, and I'm going to show you the entry rules in a second, Kishan and others were asking, I'm going to show you the entry rules in a second. Let's say you're a bit better than a coin. Not much. You're not right 10 times out of 10, which is what so many people promise, or 9 or 8 or 7. Amateurs will tell you, oh, how often I'm right. Because amateurs don't trade in the real world, okay? They think it's all about how often you're right. And of course, if you were right 10 times out of 10, that'd be the easiest way to make money. That's never happened in the history of hedge fund management. Nobody's ever been right. You might get a winning streak, just like with coins, you can get a winning streak of a bunch of heads. Toss a coin tonight 100 times, and you'll see you'll get a winning streak of heads or tails. Does that mean you've got a business as a professional coin tosser? Just because, hey, darling, I got 10 heads in a row. I'm a professional coin tosser. Put it on a t-shirt, go out, tell people that, see what they think, use their feedback, not mine. But what I'll tell you is there's a difference between a streak and what a probability is. So let's assume we're ignoring streaks. We're just saying our real probability is we're a bit better than a coin. Okay. And we'll say it's 60-40. So nothing too ambitious. Average loss, £200. Therefore, average win, we're going to remember winners add to winners. We're picking a system where we're adding to our winning position. And because that's the case, our win should be larger than our losses. Therefore, our average win should be £300. Well, what's the maths on that? See, you did 100 trades. And Bill led me through this. And I thought, okay, this makes sense. I'm going to do this. I'm going to do this. And then we came up with this number. And I went mental. I said, are you kidding me? Bill, call my parents. I was at university actually at the time. And I said, call my parents, tell them I want to, I'm going to draw this on here. I want to leave university. Whoops. I want to leave university because that's a lot of money. And that's all I want to do. I just want to trade for a living. Okay. That's what I told him. And Bill said to me, are you insane? First of all, you've ignored, for a start, you've ignored a lot of things, but you don't even know to enter the trade, but you've also ignored your losses, which is those. And I said, yeah, but Bill, that still means I've got net profit of £10,000 per 100 trades. £10,000 per 100 trades. That's more money than I'd ever seen. I was a student, remember? So this is phenomenal. And I want that. I said, do you know what I'm going to do, Bill? I'm going to be a day trader, because that was all the rage back in the day. I mean, don't forget, when I was learning all of this and writing, and the Financial Times said, look, write the book on it. And I was writing a weekly column in the FT called The Diary of an Internet Trader to put all my trades in. And then I won a competition in the Financial Times with the trades, because I'd learned all this from Bill and everyone, and that helped me raise the money because I had the profile. This is the bit which drove me nuts. I thought, this is great. I'll do 100 trades per week, 50 weeks in a year. Okay, that's 5,000 trades per annum. I'll make $500,000. I know what you're thinking, and you should. Alpesh, don't be stupid. We're not going to do 90% of that. And you're right. We're not going to do 3/4 of that. We're not even going to do a half of that, a third, a quarter, or even a fifth of that. We're not even going to do 15% of that. You're right. You're not. Let's say for a minute you did 10% of that. Well, no, you're not going to do 10% of that, because even that's too much. Remember, we said our goal is 500 per month. It's not 50,000 a year. Are you kidding me? So we're going to tone all of this down, assume it's all over exuberance, assuming that on every business plan, everything looks great. Let's tone it down some more, as Bill did for me. He said, Alpesh, you know what? Keep your day job. I want you to do 100 trades every 6 months, not in a week, but in 6 months, or 200 trades per annum. You know what that is? 1 a day or 5 a week. You can place them all 5 on a Monday if you want, or you could do 1 a day, basically. So maximum positions you'll have open, probably be about 5, because some will exit just as others open. 1 a day. Remember what I said right at the start of this webinar when I gave you the business plan outline? I said it's going to be roughly 1 a day, and that's what he wanted me to do. This allowed me to continue with university, finish it, and all the rest of it. And I think he was right, be more sensible. But wait a minute, that's still 20,000 per annum. So it's not 10%, it's 4% of our business plan. Nope. Still over optimistic. Still over optimistic. We're not going to do 10%. We're not even going to do 20,000, because again, I said it's 500 a month, and 20,000 a year is still over optimistic. In fact, 500 a month, 1,000, call it 1,000 a month, 500 to 1,000 a month is about 1.8% of our business plan. That's what we're trying to achieve, about 1.8% of our business plan. So it was one which had lots of headroom for error, for mistake, for over optimism. And he taught me that's far better than, oh, I've got this overambitious business plan and I'm going to hit it. No. But the next question you should be asking is the same question I asked him. Well, wait a minute. If this is true and these figures are right, how come everybody isn't rich? Because that's what I asked him. I said, well, this is great. And he said, well, 3 reasons. And that's what we're going to close the webinar with, finish the webinar off with. Bad teachers. Well, I don't need to go more into that. Bad mentors, similar kind of thing. Bad strategies. So let's finish the webinar with strategies. The entry strategy. How do we know when to enter? That's the reason why everybody isn't rich. The E, we've left the last part out, which is this. So remember what I said. There's my mum. I told you, honorable visit in all my webinars. 100 trades per 6 months, 200 trades per annum, £20,000 per annum. No. Pay attention. I said 500. I said 500. Okay. 500 per month. And I've sold the car. Don't have the car anymore. Okay. I have a bike, and £100 bike at that. I'm upgrading to a £300 bike. I'm going to risk it being stolen in London. Momentum trading. That's how we're going to get the entries. And how we're going to get the entries? We're going to be this guy. Okay. That's us. That's the entry. We get on a trend. That's the person who moves the market. It might be a Goldman Sachs. Those are the bigger market participants. We're not trying to stand in front of the market and guess which way it's going. So to give you an example, this is the S&P 500 today, okay? And it's accelerating on the short side. It's falling off quite sharply. Am I stressed? Am I worried? How's my mind? How does it sound to you? Should sound fine. I should sound a bit excited because we're making money on it because we've been short that since yesterday. Okay, so I should be a bit more excited, and now it's at the lowest point it's been since yesterday, so you've made me quite a lot of money. I'll share it with each of you on this webinar. No, I won't. Okay, my point is this, and we added to the winner there, we added to the position there, so we doubled down there. We actually doubled down one more time because if you're very advanced, and we've not put it on here because you guys won't be very advanced, but if you're very advanced, you can double down twice, but maximum twice. Don't do more than that because it's higher risk and it requires more management. So just leave it at 1 for now. And that's really even for the advanced people. If you're a beginner, just take your profit at that dotted line. Okay. And I've told you how these come about. 2.5 to 3 times the average volatility of the preceding 14 periods. So use average true range. Google what ATR is if you need to. So you know where the stop loss is, you know where the take profit add to winners is. Boom. So we need to work out what the hell is that then? How do we know that that's where the trend is going? What was the market doing? What happened? Did you have to read loads of news? No, I can't afford thousands of analysts. Did you have a supercomputer to do some kind of great quant workout? No, because we can't afford that. So I asked Bill, how am I going to do this? And he said to me, okay, look, you're going to measure momentum. I said, well, how am I going to measure momentum? Well, he said, look, imagine the market's moving upwards. If it's moving upwards, the best way to measure momentum is this. What you do is, has the price closed near the high? If it's closed near the high, okay, the closer it closes near the high, the more momentum there is, right? And I said, well, how am I going to do that? And why is that momentum? Because, well, it's a bit like those auctions. Anybody got 10? Anybody give me Okay, anybody give me 10? I've got 10. Anybody give me 20? Got 20. Anybody give me 30? I've got 30. That's momentum. It's closing near the high in each period. So, well, what am I supposed to do? Look at that through a magnifying glass? And he said, no, of course not. What you can do is measure, is it closing near the high? But you want to have corroboration because it's all about due diligence and making sure you're not wrong. So you want to see not only is it closing near the high, but is it making higher lows? Is it making higher highs as well? Is it making higher lows and is it making higher highs? Those are the 2 things. 3 things rather. 1, 2, 3. And he said all hedge funds all do the same 3 things. They might have different rules for it, but they all do the same things. First of all, they don't just look at one indicator or one factor. They look at multiple indicators. They corroborate. Well, that seems obvious. So they won't just look, is the price is closing near the high, and is it making higher lows or higher highs? And by the way, they might have different rules. These are the ones we have. They might have rules on, are we getting some inside information from the Fed? Or is the listening device we've planted in court, number 3, giving us illegal information? I don't know, okay? They might do that. If they're Galleon, they're insider trading in the past. If they're SAC Capital, though they deny it, they'll pay the fine for allegedly insider trading. But I'm saying whatever rules they've got. Ours, a lot more honest. And they're looking for momentum. So we have multiple indicators, and I'll show you how you can replicate it. Okay, but you need multiple indicators because you need to corroborate because it's your money. Okay, the second thing they do is they don't just look at the time frame they're trading. They need to know, is there a tram coming up going to hit me? Is there long-term sellers? Well, I'm sort of short-term digging for money here. I'm not looking up, and there's a train about to smack me in the face. We never want to be surprised, okay, in my industry. So they look at the next time frame along or multiple time frames. The third thing they do, which I'm going to tell you, and I'll come to it in a second, is PC plus PR, but I'll come to that in a second. Okay, and then we're going to do a Q&A and we'll finish the webinar. I've sort of overshot slightly, but hopefully it's worth it. You guys will agree it's worth it. Okay. So I said to him, how am I going to find this out now as a student? So he said, because you're a student, just use the tools which are freely available, but use them in a way that the textbooks don't use them. So he said, use those momentum indicators which are out there, which aren't very useful because they're not right often enough. So don't use them the way the textbooks do. Re-engineer them. So that's what we did. We re-engineered what was already out there. We didn't reinvent the wheel. We re-engineered what was out there. So we took momentum indicators like the stochastic and the MACD, and we said, you know what? The MACD is always too slow. So we'll just take the entry signal when it's flat to rising. Flat to rising. The stochastic is too premature, but we'll do the same with it. And we'll also look at the next time frame along to see, is it flat to rising for a long signal? But that wasn't enough. So we corroborated. We took multiple indicators, MACD, stochastic, for instance, Multiple time frames, that was novel. But the most important thing we did was, well, we shoved all this in Microsoft Azure and did a bit of AI to look at pattern recognition, which is the PR. But ignore that part. You don't need to worry about that. We did price confirmation. And this is what Bill told me. Price confirmations, that bit. Has the price made a 2-period high since multiple indicators, multiple time frames? Now, you might pick your own indicators and your own time frames for corroboration. What I'm saying is the next time frame across, so if it's 30-minute, also look at the 1 hour. Okay. The next time frame across and price confirmation. Has it made a 2-period high? Okay. So we wanted to look at that. I just want to show you something where sort of an example of that. Well, they're all examples of that. But if we look at the downside of, let's say, a JP, there, multiple indicators, multiple time frames. Now, why didn't it get us out there? Well, because we think that would have been too early. Why didn't we short it here? Because that was too early. Why not? Why, once it had already started in the downward trend? And you might say, well, could have done that anyway, Alpesh. Oh, by the way, these extra things to just give us a bit of a traffic light system. It just tells us how the engine's working, a bit like, you know, in your car or an airplane. It just tells you how all the systems are, which direction they're pointing in, and that's perfectly fine. The S&P 500, yes, Julia, it is there, falling a bit more, might stabilize, we'll see, but we're short on it at the moment, and boy, are we short on it on that short-term trade. So multiple indicators, multiple timeframes, but the price confirmation is more important. We finessed this, Microsoft Azure, bit of pattern recognition. We created a library of patterns to see a correlation between the past 15 periods and what then happens, and to see if there's a pattern. Today you'd put it all into ChatGPT, I guess, but it was ChatGPT kind of AI before we could use it. Basically, it was pattern recognition. It's not even clever AI, but it was pattern recognition. But you don't need to worry about that part. That was just to finesse things for us. Those were the people who could understand this. Multiple indicators, flat to rising, multiple time frames, i.e. the next time frame along. Okay, and price confirmation. Has it made a 2-period high? Those were the things. Losers add to losers, winners add to winners. Volatility-based stop loss, volatility-based position sizing. I've just summarized it all. All of those people, that's the talk I gave at Bloomberg Television. There were students, there were full-time monks, because I asked them, business owners, side retirees, professional traders, school teachers, in-between jobbers, full-time plumbers. You had the whole thing. And the reason you had all of them is because that's how it works. You have all of them and they get it. I perfected this, as I mentioned. I wrote the first book when I met the world's leading traders. And I thank God I met them so early, because it meant it took another 10 years to set up the fund, because it took that long before I realized I could when I won the competition in the FT and then had enough of a profile. So I met them when I was at university. That red carnation means last exam. Sorry, I look a bit of a whatever I look. Got more hair there, though. Perfected the strategy back then. It's helped me win awards and raise profile. That profile in the FT was critical to raising capital. They then said, would you like to write books on this? And I said, hell yeah, because that'll raise capital. It'll raise profile, which will help raise capital. That's me still looking angry because we didn't raise $1 billion. Look at that numpty, Neil Woodford, number 14 in the list. They gave him billions. They didn't give me billions. They gave that numpty, but they choose who they want to make as winners, and they choose who they don't. Anyway, I'm not bitter. Well, the way I then set up using that approach, that's now one of 10 algorithms we use in the hedge fund. We've got another 9. Why am I sharing the rules of it? Well, you're not going to put me out. Well, if you're going to put me out of business, let me know how. That multiple indicators, multiple time frames. Okay, price confirmation, winners out to winners, losers out to losers. That's the essence of trading. It's been explained in here. It's been explained in here. We then put it into a software so we could train our staff on it. It's one of 10. It's my first trading system and approach. I then licensed that know-how to Merrill Lynch HSBC when they had an alliance back in the day. There you go. All of that paid for me to be able to set up the hedge fund. Remember, I didn't have $1 million, which is roughly what it cost to set up the fund. It's me at the first set of offices. I remember that day very well. That's in Linden Hall. Let me tell you how much it makes on good and bad days. On a bad month, makes nothing. But this is how it works. Okay, the best time frame is the 1 hour time frame. That's the best time frame. Why? It doesn't mean you shouldn't do the other time frames. It's just all about return on time invested. People say to me, can you be a day trader, just bang the keyboard? No, because you're not going to make more returns. And I'll explain to you why. These subtleties are missed by people who don't have somebody explaining to them. Number of trades per month, 25, roughly. Okay, one a working day. Some months you might get lots more signals. You might do 40. Other months, like August, typically, you might only do about 18. So that varies. Okay. And don't forget, our goal is 500 a month. We're not guaranteed that by any means. There'll be some months you make more, some months you make less there, and you average it down. Okay. There's some months you lose money and you average it down. That's what it is. And then it should come closer to the 500, a bit like tossing a coin. Toss it 1,000 times, you're almost exactly going to get 50-50, heads and tails. That's what this is. Okay. It all comes down to probability and mathematics. Net pips captured, 2,250 net on average. Some months, but the variance is huge. Some months it could be as high as 4,000. Okay. Other months it'll be negative. Let's call it even 0. Right. So there's a big variance. So don't read too much into that, because whilst it's a good average, it can vary. 2,250. Best winning streak, 70 out of 100 winning trades. Worst, 30 out of 100. But that doesn't matter. I'll tell you why. Typical max loss, 50 points gets hit before stop loss gets hit. Again, big variations. Let's say you didn't listen to me and you did $2 a point. Okay, whether it's CFDs, options, cash, futures, whatever. Okay, then you'd have lost $100. That's way too much risk. But if you did $2 a point, you would have made $2 times 2,250, which is net pips captured in a month. You would have made a profit of 4,500. Well, hang on. I said we're looking at 500 a month, 10% of that. And we are. We want 10% of that. The tortoise, not the hare. Therefore, we don't need $2. We need 20 cents. This is the second most important slide in the presentation. 20 cents. 20 cents means you've got a piece of technology which is like mass retail. It's like Google. Google searches the internet for information. Well, this searches all these price data points. You see all these for information, which is, are there any multiple indicators, flat to rising, in multiple time frames with price confirmation? We add in a bit of pattern recognition as well. But like I said, you don't need to worry about that. It's not like some secret source. It's just, it comes with experience. We just get computers to do as much of this automation as possible. Okay, so, all right, I see. It does all of that. That's like Google. But if you're doing just 20 cents, then that's mass market. So initially we created this for teaching our own people. Then Barclays Bank said to me, you can spin this out as a fintech. You can get venture capital investment. Eventually IPO. Actually, the person who told me at Barclays, I was just speaking to him today. He's in Dubai now. I'll introduce you to him in a second online. And this is what he said he wanted me to do. He said, and I said, no. He said, well, why didn't you create the software, spin it out, and let people do it at their own pace with a manual? And I said, no, I'm running a hedge fund. I haven't got the time to do that. And he said, you could give them one-to-one attention. I said, are you bloody kidding me? Make it convenient, compatible with work, no hotel costs, no travel costs, which is what software can do, live trading practice. Then he got my attention. He got my attention because he said, we can tick all those boxes, but you can spin out this fintech and you can get venture capital investment. You can float this. It could become a unicorn, a billion-dollar company in 5-10 years, because trading is global. The brokers are billion-dollar companies. Saxo, CMC, IG, they're all billion-dollar companies. Why wouldn't the technology that private investors who can use it anywhere in the world have access to countries like the US, which CMC can't operate in, and IG have limited operations in? Why wouldn't it? And then he got my attention. I said, well, wait a minute. As a hedge fund manager, yeah, that gets me interested. So he called it, this is Biku from Barclays. He called it pipspredator. Buy when the price goes above the horizontal line, because that confirms this price momentum and the odds of a profitable move are increased. Arrow alerts you on where to look for a signal for ease and convenience. Up arrow means buy. Okay, there you go. Up arrow means buy, and that's where you go. Can it make money? Well, I'll show you some more trades in a second. Is it easy? Yeah, because you're following the signals and they can give an alert on your phone. I don't want you trading on your phone. Can you do it anytime with a day job? Yeah, because the trade durations are 1 to 3 days. I did it with a day job. How much does it make? I'll show you some more trades in a second. Does it make life easier? Yeah, because we give you the same manual we use our staff. Are there checklists and simple rules? Hell yes, there are. Okay. James said, what long-term holdings? James, I'll do an investment webinar in 2 weeks. This is a trading one, but I'll do an investment one separately. So this is Eurodollar. One of our first apprentices who did this was actually, I think, one of Biku's, but full disclosure, it's not one of mine. And he did 5-minute bars, and I didn't like that. But anyway, he showed me this, and this is after he, had done it for a while. So it's one of the first apprentices, but done it for a while. Hence why he's done such a large clip, because he'd built up quite a corpus of money. That was $2,250. That's not normal, because you don't start with $30 a pip. You build that up. You build it up over time. Okay, 15-minute bars, 9 hours. And that was one of his better trades. So he'd send me those across. But he could only get up to that level. That's the end goal, to get to that level. He could only do that. Now he lives in Dubai, by the way. He could only do that because he'd built it up gradually from small. And in his case, I think it took a year to get to that level. It might have been slightly longer even. Who gets to is behind this? That wasn't a fault on your IT systems. That's me being an owl and wise. Gets to the heart of the matter of trading by clearly elucidating the methodologies of successful trading strategies. Who is behind it? Who endorses it? Who thinks it's a good idea? Who? Well, this is who. Chairman of the Chicago Board of Trade wrote this. Gets to the heart of the matter of trading by clearly elucidating the methodologies of successful trading strategies. I've taken the methodologies of successful trading strategies and we put it into fintech, financial technology. We put it into software. Because without an indicator, this is what people were doing. Okay, with an indicator, that's what they were doing. They were doing the whole JCB thing. They had a lot more support. So that's with an indicator. We know where to look and when to look. So now we're not doing it all manually. That's where there were multiple indicators, flat to falling, because it's a short trade, over this and the next time frame, the 4-hour time frame, and we had a 2-period low. So before, my team would have to do all of that manually. Now they don't need to. This is Microsoft, I said weekly. I wouldn't normally do it on the weekly side of things, but it's on there. That's sterling's, yen, short, and then long. Now, why is that good for my mind? It's good for my mind because I don't need to be short 1 minute and then long the next and think, oh my God, which way am I going? What's going on? I don't need to read a ton of information either. Okay, and try and assimilate. I do read the markets every day out of interest, not out of, oh God, I've got to come up with a new and good idea. So now I know the S&P is falling. I know I'm making money out of it and I'm relaxed. And you guys have been good luck for me because look, that's now down to there. Okay. That's the way we look at it. Now that's because with an indicator, we could do that. We spun that out and created this as a separate standalone technology. We gave a program of education with it as well, lifetime, no subscriptions. I hate subscriptions, remember. Okay, so a one-off charge, but updates every day, mentoring from me one-to-one, and that's why I have to limit numbers, because it's me who onboard people, but you've got me as a mentor for life. And the reason we did it is because when then Biku put the numbers in front of me, we can get a $30 to $40 million valuation on this once we get 1,000 people profitable through the company. We're probably about 800-ish, and I'll show you the numbers in a second on it. And once we get that, then we could IPO it, and maybe 4 or 5 years after that, go global. What I decided is the first 1,000, we're through about 850, 900-ish at the moment through the program. The first 1,000, I will always be their mentor. People say, where do you get the time? I said, when people are profitable, they don't need to be calling me all the time. They only need my time to start off with. And it ups the value of my company every time they're profitable and make money. That's Bick who thought of the name. He was at Barclays. He's now left. He left school at 16. The reason I say that, not only was he then best man at my wedding, but he also doesn't have a degree. Okay, he worked at Barclays, so he knows finance. He's the one who really came up with the idea, the name, and that we should do this. Because initially I was resisting it, saying, why would I do something different? And I spent most of my time trading and loved it as a novice. I know what to trade. I don't think he's a novice anymore because that's when he said it. How much? And can leave the exit and get on with my other work. He's going to be back in London. It's his birthday on May the 1st. He shares it with my parents. So I think he's going to be here for then. So I'll try and do another updated photo with him on there. How many licenses? Well, it used to be 25 per event. Remember, it's yours for life. And just for trying it, I give signed copies of my 2 most recent books, physical copies, a USB trading journal, and a bunch of other goodies just for trying it. And it's yours to keep, even if you say, nah, it's not for me. All that I ask of the people who try it is when the VCs ask, please give them an honest opinion. Even if the honest opinion is, well, I thought it was a bit technical, or your honest opinion is, yeah, great, I love it. And we're creating and collecting those reviews as well. It's the only thing I ask. And it was 25, but we've had a bit of a surge because we've made it into installments. And so now people are going nuts over it. Okay. That's the URL. It is first come, first serve, a bit like the Royal Concert. First come, first serve. I forgot to remove that. That should be 15. It's 15 attendees, I'm afraid. Only because, as I said, it's just going to get too many for me to mentor at any given time. So I mentor them, and then when I've got time, I take on another 15. Another 15. My secretary determines how many emails am I getting, and if I'm getting less than one a day, then she says, right, you can take on another batch of 15, and that's what we do. Okay, so it used to be 25, and by increasing it to 24 installments, remember, all the data is included for life. The software, the updates, the upgrades are on version 4 now. Okay, we did move to 5 and 6 and then pulled it back to 4 because 4 was just doing fine. So I thought, well, why confuse things for people and when they don't need to reinstall things, because it made a marginal difference because 4 was doing so great. So we're at 4, version 4. Daily updates are included. The community site, I'll show you all of that in a second. Our ambition is to get a valuation of about 30 to 40 million, raise capital from venture capitalists on that valuation. So we'll probably raise maybe 5 to 10 million on that, and then float it in 10 to 15, 10 years after that, worst case, and 5 years, best case. And hopefully, because it's a global thing, there are so many retail clients around the world. We didn't want to open up a brokerage like a Saxo and compete with them or an IG, because where would that get us? We thought software. So the first 1,000 will always have me. By the way, the eventual plan is to have subscription. You won't be affected by that. You won't ever have a subscription. People after the 1,000 won't have me as the mentor. They'll have others, and there'll be a subscription model of we're planning about 3,000 to 4,000 a year for mentoring, 3,000 to 4,000 a year for trading, but not for you guys. The first 1,000 are just that flat fee, and now we've done installments and made it even more accessible, which was an idea of, well, actually, it was partly Bicker. It's partly one or two people said, can we have it more accessible? Instant download is what you get. The custom instruction, the manual, the calls with me. Send me your trade so I can look over your shoulder. You can look over mine because we post on the private Telegram channel the daily trades we're focused on and looking at and why. You're part of the trading club. I'll show you that community site in a second. We have a dedicated website. We also do 6 live webinars each week on Saturdays, 11 o'clock on stop losses, 12 o'clock on entries, 1 o'clock on limit orders, 2 o'clock on money management, 3 o'clock on trading psychology, and 4 o'clock on adding to winners. So you've got a lot of ways of getting hold of me. And we also do a WhatsApp group as well on there. And now monthly meetings every month in central London for apprentices. I've done 2 already. I missed last month, but this month we're going to do, May. And I've also got an event in Parliament, which I've invited a bunch of the pipspredator users to as well. Let me know when you sign up, because I'll give you a shout out. My job through this is either to be in this list or to be in that list. Why? Well, as a teetotal vegetarian, it's not for the money. It's just because it's something to do. I mean, what else are you going to do? There's something to do. Might as well get there. The best endorsement I had for the software, because the software puts together the strategies, is this: clearly elucidating the methodologies of successful trading strategies. Chairman of the Chicago Board of Trade at the time, Pat Arbor, and it's in print on this book. Our reviews are not from Mrs. MP from Croydon or Mr. JK from Manchester. And then what we did is we did a bunch of interviews with people, because we thought, what's going to happen? People aren't going to believe how great this is. They're going to want actual video reviews, not just written reviews, because they can be bloody written by anybody. So we then recorded the reviews. I said to the team, now I think we're going to have to record the reviews. We put it on a dedicated website, alpeshpatelreviews.com. We wrote them out. We then recorded them. Okay, so people could actually see. This was probably one of the most successful students we've had. He created 2 $10 million companies from pipspredator, and he explains how in this interview, and he goes into some of the details on how he did it. And obviously I'm incredibly grateful, and there's a whole bunch of others. But yeah, it's the reason we did the reviews is because we feel that if we don't do the videos, people go, oh, where they're from, and there's a load more coming. But it's that what I ask of people when they sign up. So you'll be my apprentice. I copied these two billionaires. If it's good for those billionaires, it's good for me. I mean, what great role models they are, wouldn't you agree? And that's what it was. That's what we did. Whoops, there we go. And it's the first 15, not 25. I'm afraid we've had a whole bunch go through already. Let me know when you sign up, and I will put it up. Michael, the May meetup, I'm going to put the invite on the private Telegram channel in probably the next week, once I've got the date sorted for that, because I've not fixed the date for it yet, but it'll be on the Strand as ever. It'll probably be the second or third week of May on that. So I'll just get the coronation sort of out of the way, in the sense that there's no point having an event when it's difficult to get into central London next week. So it'll be a bit after. I haven't fixed the date, but I'll let you know, and it'll be on the private Telegram channel, the invite for that. So do come along to that. Okay, any questions at all on what I've said at any point, anything at all, let me know. Okay, I don't want anybody to go away thinking I've not answered every single question, what our ambitions are, where we think it's going, what I think is going to happen with the markets. Well, I'll answer what I think is going to happen with the markets, because if I look at that in the short term, I think we're short the S&P. I can ex post facto, as I used to do when we were on Bloomberg TV, look at the news and then say, oh, that's because the market's concerned about some of the earnings figures that have come out today in the banking crisis. But actually, it's a downward trend. It's a momentum trend. These are largely algorithmic trades which are being placed. It's got nothing to do with what the market thinks. I mean, TV talks constantly about, oh, the market thinks this, the market thinks that. That's absolute twaddle. The market doesn't think any of those things, because nowadays most trading is, I'm afraid, algorithmic. Okay. It's as simple as that. Don't forget, join me at the Financial Times Investors Chronicle event and connect with me or follow me. If you're oh, that's my wife. She's posted something. I'll have to have a look at that, what she posted later on. If you are an apprentice of mine, you signed up today, then connect with me. If you are not, then just follow me on LinkedIn, and you'll see all the events and all the posts and articles and everything else, and the events that I've got and so on. That was me on the BBC yesterday talking banks. Well, guess what? I just looked at UBS on the trend and all of that. That's how I did it. So that was me. That's me breaking, probably breaking something. And I use the indicator when I'm on TV. It's on. And by the way, look, there you go. BBC. There's Pips Predator right over my shoulder. I had to get in the office early for that one. So like I said, when I'm on TV and I'm talking here about oil with Sally, it will be a discussion about, it will really be, they won't know or care. That's the algorithms that I'm using on trend following. We have a community site, both on Facebook, and more importantly, Facebook's not really got the traction we thought it would. I guess more people aren't on Facebook, but also a dedicated community site all about the indicator, absolute beginners, what and when to trade. And you can even search this database. You can ask questions. So all the community can ask questions and I answer them. What and when to trade. It's got all sorts of stuff on there, learning trade selection and so on and so forth. And we even go through a whole bunch of information there and sort of show and explain and how and why. So really they can learn through videos, they can learn through that. But I've got something else which I think is even better for as a teaching tool and learning trading other than just this. Okay, and I've given you all the rules to manually do it yourself if you wish. And by the way, when you go to alpeshpatel.com/go, when you click on, you've got three options. You can just pay outright. And if you don't pay VAT because you're outside the UK, then that's great. You can do 4 installments or you can do 24. Entirely up to you. The 24 things, limited time only. We're trialing it to see how that works. If we find a lot of abuse, people sort of just decide, yeah, I'm not going to pay now, decide against it, then we'll probably get rid of it. I don't think we'll do that because we've never found that before with anything else. So, and don't forget, you've got a 30-day guarantee, not 12, not 7, not 14, not 21, but the whole 30 days. And you get to keep the books and everything else just for trialing it. Okay. Our dedicated website, which has got the 12-week program as well. Okay, so you can see all of this and I explain what it is we're doing. We've got clients from all around the world. And that's why we think it's a global piece of technology, which it has to be if it's going to be a unicorn, which I think it can be. It can be. Hi, Alpesh. How long will the link be available at the current cost, assuming you don't get 15 tonight, of course? At the current cost, because we just upped it. Oh, how long do you need, Martin? Just email me and I'll do a special allowance for you. Rather than telling everybody I'll leave it on forever and tie myself up in knots, why don't you just email me or message me how long you want me to keep it fixed for you, or anybody else. Thank you, Raj. I'm delighted as well. Why do you sell for only 24 lots of fire? Surely it would be worth more given the results. Yeah, it'd be worth billions, but James, have you got billions? You haven't. That's the problem. You can't have a retail product which is worth lots. So what you've got to do to make that money is float the company. Look at Google. It offers it for free. Why? Because it floated. What it did is get a whole bunch of people on there for free and then made the money from the IPO, and the advertising, whatever, will make the money from the IPO by selling a fraction of that. If we made it zero, but I don't think people will respect it. If we made it, you've got to pay £1 million. By the way, if you're an institution, the price is significantly higher. It's 100,000, and a few institutions have had to pay that. But if you're an institution, it's significantly higher. So that's why it's fixed at that level, to make it accessible, because the money comes from the IPO. It doesn't come from you guys. Which, think about it. It can't come from you guys because I've got to cap it at 15 every time because it's me doing the mentoring. We've had some great reviews of my work. There you go, from Coots Bank to CNBC. And there's a whole bunch more videos there you'll be able to see as well. I think I've shown you those ones before as well. I'll just show you the reviews and everything else. So we're really proud with what we've created with this. But there's a 12-week program for those who really want to learn. I've got some people who want to be hedge fund managers. That's about 5% of the people. I've got others who just want side income. So the whole point of this is, whether you are looking at a side income, what else, we wanted it to be like any technology, as global in appeal as possible, as global in appeal as possible. And let me know, give me feedback if you think there's anything we're missing. Rothschilds, great having Alpesh as a speaker at the Edmund Rothschild. So what I try and do is be a 360-degree mentor. It's not just mentoring you on trading. I sometimes have fathers and sons, mothers and daughters. Mothers and daughters is very rare, but fathers and sons is far more common, or husbands and wives who want to learn trading and the finance and the markets. And I mentor them on, might be career if I can help them with, or open doors through my networks on LinkedIn, or networking events, which is a new thing we've started. So it's all of these things which I want to make it more value add, because that's an edge we've got. The networking power, the ability to meet people and connect them. So we try and do all of that as well. That's me not quite explaining what I do to the Duke and Duchess of Cambridge, or the Prince and Princess of Wales now, and that's my wife there. It's more me explaining that I work with my wife as well. That was an interesting time. So that was actually tech entrepreneurs. There's quite a bit. I take this global and talk about my own tech entrepreneur journey on all of that. But yeah, so I decided that actually it makes sense, given so many people were asking me, well, what do you think I should do in my business or in my career? I thought, well, actually, why don't I just include all of that? So it's a competitive edge that others don't have. This is the 12-week program, which is in there. Okay. And you don't have to do it. There's a 30-day one as well, but it's updated regularly, and there's daily updates on Telegram. I'll just show the private Telegram channel in just a second. Here it is. So that's the private Telegram channel with some postings that I've put on there. That's my Parliament event, Women in Business and Tech, that I'm co-hosting. That's an invite. So there's an invite in Parliament to my people as well on here that I've sent. Anyway, so there's all this, and it's structured week 1, week 2. So there's a whole bunch of stuff there as well. What percent of the money you raise from the IPO will be put back into developing the software? I don't know yet. It's way too early to tell. It's way too early to tell, because by then, as I discovered at the start of, well, the end of last year, a hell of a lot will probably now go into AI and Azure, I think. But my God, in 12 months, something else comes along and I won't even know. So I don't know how much will go back in from the fundraise into development and what will go into marketing. But I'd certainly want the vast majority to go into R&D than just marketing. So yeah, but I just don't know what the percentage of the numbers are. It's just way too early to tell at the moment. Martin, oh, you've asked that one. I've answered that one. So yeah, we do this in a very structured way. Now, you don't have to do this. The simplest thing most students do is just download and install the indicator. But I do say to them, I'll tell you what the most successful ones are. And I'll tell you what the guy who founded 2 $10 million companies, which is on the review, said and did. They send me screenshots so I can look over their shoulder and they can look over mine because every day I show what trades we're focused on. So those two things are really important. Do use me as the mentor. I have a vested interest in mentoring you because that helps the valuation of my company. There's a direct link between you guys being profitable and the value of the company. It's as simple as that. Okay, so I have a very, very self-interest in making sure you're successful at it. Because let's say I had 1,000 people and nobody made money. Well, the value of the company would be zero. So I would have just wasted a shed load of time. Okay, because between the staff, Paresh, Simpi, Shireen, Judy, Francisco, the cost of the software doesn't cover that. So we subsidize this heavily still, and that's fine. We're happy to do it because we know what the end goal is and we can afford it. Equally, we didn't want to make it so out of reach that you couldn't have any clients, and we didn't want to make it so cheap that you wouldn't be valued or respected. Anyway, so there's all of that. I'm sort of going on about sort of behind the scenes what our thinking is, but I thought it might be useful. That's where we are, by the way, on the S&P, which I guess is the most lucrative trade tonight of all of them, because Microsoft, Google, I mean, they're longer term stuff anyway. So that's where we are with everything over there. Any questions, let me know. Janice, the other tech, shorter term is Amazon. That's the Amazon 5-minute bar. So that's where Amazon is. Okay, so short, and it's fallen off a bit, I guess, with the sell-off with the rest of the market. I haven't looked at the news, but I can tell it's there. Hi, Alpesh, one of the slides shows pipspredator at 2K. The link is to, have I missed the offer? Which slide showed it at 2K? It's 3450. It's Nilan, I'm afraid. Which slide showed it at 2K? I don't remember seeing that, I'm afraid. But that's an old price. The price will rise again this year. I've been saying this for years. It used to be 1,000, and a bit like Bitcoin, as we get more people, the price goes up. But what we did with the price increase, because we've putting more and more resources, we've now got events, we've now got more networking events, we've got more staff to support and help, we've got the Telegram channel, we've got the daily updates. We're providing more and more and more and more support and help. We've got 2 community channels, not one. We've got the Facebook one and the other one. You might say, well, I don't want any of that. We've got more content updates, more live trade updates. So for all of that, Raf has asked a very important question. Do the 1,000 get a stake in the company equity options? Yes, it's something I've mentioned before, and I still will stick by that. My goal is, subject to what lawyers say, and I don't see any legal problem behind it, is all the first 1,000 to have some stock in the company. Now, again, there's a very, very commercial reason for that. And the reason is, and it's not some tax deduction or whatever, although there probably is. It's because that is the best word of mouth. If you're a shareholder in it, you will doubtless want to tell 1,000 to 2,000 to 3,000 other people. That's why. So I do plan to do that. I have no legal reasons to assume that wouldn't happen, and it'd be a meaningful stake. I mean, it'd be more than the cost of the software. Let's put it that way. Is the plan at IPO for you to have more than the cost of the software back in shares? Because the valuation should be that big that giving you 3,415 stock should not be a problem, should it? You know, it should be like, oh, well, that's minuscule. That's the idea, you know. Otherwise, the IPO wouldn't be worth it, would it? So it's sort of clever because it's self-fulfilling as well. Nilan, I don't know which one. Sorry, I apologize. I don't know which is that slide, but I'm afraid it is 3450. But that's why we, like I said, we did the installments. I'm sort of repeating myself. It's why we did the installments, to make it more manageable for people. Because I asked people, I said, how much do you pay for your phone? And they'd say £55 a month. And I said, how much is that costing you over 2 years? And they wouldn't know. And I said, do you know what people are more bothered about? Affordability rather than total cost. So we said, well, let's just make it affordable, but also fair to us. Because when you see the videos and the reviews, what you can see is people who've done incredibly well. And we thought, well, if we price it too low, we're stupid. We're just on principle, we're stupid. But also the amount of support we wanted to give and the extra resources and the people who wanted behind it, we thought we want to give a fair service to people. So it was all of those reasons. It was fairness in terms of how much they're making, fairness. And don't forget, that's it. It's not a subscription. So the installments are not a subscription. That's it. It's yours for life, and the updates are yours for life. The daily updates are yours for life. So it's pay once, own forever, including all upgrades and updates. Microsoft doesn't do that. Okay, they charge you forever. Okay, we're doing that for the first 1,000 charter members. After that, for others, there'll be a subscription and so on. Otherwise, it probably not be able to raise. Well, some of the VCs have said you probably won't be able to raise the valuation you want. And I have my figure in my mind of 30 to 40 to 50 million US dollars. So without subscription, but for the first 1,000, I don't need to do that. Okay, so that's that. Seed investment tax relief. Yeah, no, Martin, I know. SEIS. No, well aware of all of that. They would get the tax benefit, but I'm sure we will as well by giving them some equity in due course. And we'll work out a way that it's simple enough for all the users, because we've got all the users' details. That's the great thing. All the apprentices. So yeah, that's why we did the installment thing, to really make it more accessible, but at the same time respectable. I mean, you know, if we said it's £1 a month, who's going to respect it? They're going to go, nah, you know, no thanks. And the idea also is that people, because they've got it forever, they don't feel this pressure to, oh my God, I better just start trading with live cash on day one, which is the worst thing you can do. I'm going to get going. Can anybody tell me what the score is in the football, by the way? First half's finished. I hope it's Man City winning it. I'm from Leeds. But not often I want Manchester to win anything, but I want Arsenal to win it even less, I'm afraid. Okay, I'm going to get going. Let me just put it back on the camera. I hope everything I've said has been coherent and helpful and useful. Oops, no. So any other questions, just let me know. Otherwise, put them on there and I will answer them in due course. Okay. And that's it, really. That's our ambition. I think either as a hedge fund, we'll get to $1 billion of assets under management, given that we haven't done it in 15 years. Like I said, because we're not Goldman Sachs or JP Morgan is the best excuse I can come up with, though some of my friends said that's not a good excuse. Or we want the financial technology to be worth, well, that's better, to be worth $1 billion. And in today's arena, when tech companies do achieve that, I think that's available. Man City 3-0. Job done for them. Right, I've got to call up my second best friend, or a joint best friend, who's an Arsenal supporter, who keeps taking me to the Emirates to see Leeds lose. I'm a Leeds fan. I'm going to catch the second half of this, guys. Thank you all very much. Any questions, let me know. Hope you enjoyed the webinar. Hope you found it informative. Email me if there's something I've not answered. I don't want anybody ever to be left unsatisfied, as it were, or underwhelmed at the end of mine. Zulfikar, I can look at gold, my friend. I won't do it right now because I haven't got it up and I have to put it up and all the rest of it. But I can sort of send you something on gold in due course, I guess, if that's okay with you, if you don't mind, and I'll do that. It's not a problem. On that, I mean, I think the biggest worry with gold is it already overvalued or not? Actually, you know what? Wait a second. I've got it right up here. Gold, XAU, US dollar. Let's look at gold against the US dollar as opposed to. I'll pull it up. I'll put it up for you. So let's look at the daily. That's the daily chart, which is still long. Okay, there was a short, and that's long, which you're well aware of. It's gone from there, and it's still a long. Bit mixed. It's some bit of pullback. If we look at the 15-minute, we've got a short on there. Okay, so it depends. You know, if you're looking short term, it's that. Looking at daily, it's long. Okay, and you might hedge it. You might say, well, I've got some long-term holdings. I know I'll trade the short term, and some of my students do that. What they'll do is they'll say, Alpesh, I traded the 1 hour. And I saw it was short, and then I looked at the 15-minute and I saw there was a long signal. So what I've done is both trades on both time frames, so I'm hedged out anyway, and should one of them not make money, at least the other one should, etc., etc., etc. So that's fine. Michael said share. I don't know what that means. Oh, sorry, I didn't share it. Apologies, I've turned the screen. Oh, I'm such a numpty. Entire screen, there we go. I'll share it. Zulfikar, here you go. Where did I put it? I put it down here. There it is. So that's the daily chart. There's gold. And we had the long signal back in March, okay, on that after a short, belated short, which didn't amount to much. But on the 15, you've got a short. So you could just short the 15-minute and keep long the daily, okay, which is one way to do it. All right. So that's one way to do it. And what usually happens with my apprentices, they might say to me, Alpesh, let's say you were an apprentice Ulfiger, and you said to me, Alpesh, I'm looking at gold. What do you think? And I might say, well, look, let's look at an idea. Let's put into theory a way of mitigating risk for you to do it. And you might look at this, you might say, yeah, actually, I quite like gold for the long term, Alpesh. And you might say, I'll get an ETF or whatever else. But in the short term, I want to see if there's any short trades against it so I can pay off again. So those kind of techniques, and there's ideas to bounce off. You can see why I limit it to 15 people at a time. Then what happens is in the initial periods, because you're getting mentored, you're learning everything, you'll ask me a lot of questions. Going forward, you'll just say, hey, I'm good, thanks, mate. Okay, so I'm going to go. Hopefully you found that helpful. I should probably do a webinar where all I do is just go through charts that you've asked me about and nothing else. I mean, that might be one way to go. It's just that if somebody's a total beginner, that really won't make much sense for them. But I thought I'd do that anyway. What else? What else? That's where we are. I'm going to leave it with Amazon as the market closes. So I'm not too worried. We made money on the short, even though on the long, I would have lost today because the long is my long-term investment. Okay. Harvind, oh, sorry, Betty, the DAX, can I send it? Otherwise, I'm going to end up with too much stuff. Can I send that to you? Not least because I've got a cough and I've got a call coming up soon and I can't find the DAX on here anyway. Let me see if I can find it, then I'll do it. Okay, DAX. I'm going to put it in place of gold. Where are we on the DAX? Let me look for it. Sorry. Okay, DAX is... There's the DAX. There's the DAX. 30-minute, that's definitely a short still, okay? But that's just 30-minute short. On the 1 day, we've got a long, which is falling off a bit, but that's the 1 day long. Okay, there was a short which did well initially and then would have hit its profitable stop because it's fallen off a bit. There was a long before which did well on the daily. That was good. The short sort of, okay, and then it's a long which is falling back a little bit. It's going nowhere. So you might just say, you know what, I'll just stick to a different time frame. Okay, up to you. I'm going to get going because I have got a lot to be getting on with. Thank you all very much indeed. Thanks everyone who's been on and see you soon. Thank you.